Hey, welcome to this week's TrendForce training. We just wrapped it up and it's all about Fibonacci. So guys, that is a number sequence. If you don't know what it is, it's in everything. It's baked into creation, into design. It is the golden ratio, the 1.618. You're going to see it all over the place. Once you see it, you can't unsee it. And so it's also in the markets. And because it's in the markets, it is definitely in TrendForce. And tonight, my dad and I each showed you guys how you can utilize the Fib retracement tool, also with the extension tool to predict where price is most likely to go next. So this session is absolutely loaded. Get ready to take some notes. If you have any questions about tonight, never hesitate to reach out to me on social media or in our group chat. It's all in our System 2.0 PDF as well. But otherwise, guys, enjoy the session. We'll see you on the inside. All right. Welcome, everyone. Tuesday night training. This feels so weird to me. I'm looking to my left now because everything's different in my office. Done a full reno. But anyway, I'm going to keep remembering to look left instead of straight ahead. But tonight's going to be a lot of fun. We're diving into Fibonacci, which is something we've been wanting to do a new session on for ages. I covered it once, I want to say in March or May, beginning of this year while Dad wasn't feeling too well. But tonight, the main kicker is we get Dad teaching his version of how he uses the Fibonacci tool. So it's going to be loaded. He's going to go first for a good chunk, and then I'm going to go with my Fib approach for the second half. And so it's going to be great. So anyway, without further ado, we're going to dive into this thing. I'm going to welcome Dad into the mix here and get you screen sharing. And otherwise, hope the rest of you are all doing super well watching this now or later. So Dad, I'm going to find you, pin you. There you are.
There you go.
Fibonacci.
Got my screen.
We can see your screen, and you know what? I mean, look, Fibonacci is a massive deal. I'm sure we're going to layer in all the... I actually thought about doing the beginning, but anyway, let's just get into it. What the heck are Fibs? What they matter to trading? Why we use them? What influence they've had on TrendForce? And all things Fibs tonight. So over to you.
Hey, maybe I should just not share my screen first and just talk. So I'll stop sharing. Can you see me?
Yeah, perfect. Go for it. I'll unpin myself and then it's all you. Go for gold.
Well, I think it goes without saying that I love Fibonacci numbers. I love the maths. I mean, that to me, look, I know different things float our boats. You know, we all have our passions and different giftings, different mixes. But I love maths. I love calculations. And as soon as I began to hear Fibonacci numbers in trading, man, that really got my attention. So Fibonacci is massive. Numbers are absolutely massive for trading. So a bit of theory, then as Tar said, I'll give you sort of my take, he'll give his take. I mean, it's not an exact science. You know, they say there's more than one way to skin a cat. Oops, sorry, if you're a cat lover. But there's more than one approach you can use. You know, people use, although we all use Fibonacci numbers, people use different ones, emphasize different ones. So it's not an exact science. And you need to find eventually what works for you. So I mean, I'll get ahead of myself. I mainly use Fib extensions, while Tar mainly uses Fib retracements. And both of our settings are in our training documents. You'll see the PDF. I mean, I've cooked the book, so I only use the Fibonacci retracement tool, but I use it for extensions too. So I'll show you how I do that and what the difference is, but I'll find it easier just with one tool. So basically, what are Fibonacci numbers? So most of you will know they're invented by someone called Leonardo Fibonacci. That's who became known as like about 1,000 years ago. And some people say even someone in India used them 2,000 years ago. So they've been around. But it's basically you're just adding the sum of the previous numbers. So 0 plus 1 is 1, then 1 plus 1 is 2, 2 plus 1 is 3, 3 plus 2 is 5, 5 plus 3 is 8, 8 and 5 is 13. And so you carry on, and they just go into the thousands. So they're crazy how it works. I mean, they're seen in nature. You know, in New Zealand, we have our plant, the koru. That is the shape. If you use the Fibonacci numbers, that explains the shape, even the human body, the ear. In nature, they're everywhere, all parts of biology, growth cycles, architecture, art. You know, people may not know what Fibonacci numbers are, but when you see a building or art that's been designed with Fibonacci numbers in, it's pleasing to the eye, which is amazing. And so those are all the Fibonacci numbers. We use a lot of them. And let me say this right now, that when I stumbled upon this, I realized that Fibonacci's are absolutely vital in trading. So TrendForce is all about Fibonacci. I've used those numbers everywhere. All our EMAs will know, all the calculations you can't see, you know, that I tweak. When I design parts of the indicator, I have it as a separate one. I fiddle around, but always Fibonacci numbers give the best results. So that is huge in trading and in our indicators. So those are the Fibonacci numbers. So you'll be familiar. We talk about the 13, the 21. We talk about the 233, the 987, the 2584. Those are just some of them. But those are the ones we've discovered have the biggest effect on trading. And so also then you get the ratios, you get Fibonacci ratios, and those what we're going to look at tonight. We often talk about the 236, the 0.5, the 618, the 786. Those ratios are simply calculated by dividing one Fibonacci by another. So for example, if you divide 21, which is a fib number, into 55, you get 38.2%, or that's where we get the 302 from. Or if you divide 55 by 233, you'll get 23.6%. That's where we get the 236 from. And likewise, you can take the 233, you can divide it by the 377, or you can also take the 987 divided by the 1597. Those will both give you 61.8%, where we get the 618 from. So basically, the golden ratio is a 618. That's one of the key numbers that's used in trading. But you'll see with my fib numbers and my little fib tool, markets respond strongly to these kind of ratios, the ones that I've got, the 236, the 382, the 0.5, the 618, and the 786. So that's what markets tend to respond to. But it's amazing, that it's not mystical, it's behavioral. That's the whole thing. Once I understood that, it was like did my head in, that it's like when people see charts and they can subconsciously recognize fib patterns without knowing it. All the big institutions, all the big money, the big banks, the ones that use algos, all those things, they're all aligned with fib ratios. Even markets move with contraction and expansion. They all move in fib numbers, which is crazy. And that's why, of course, as soon as I started coding, I jumped onto that and I use fib numbers. For example, we use the 233. I think it was Melvin that asked that question this morning about why is it important, and it's in our feed there. But that is a fib number that the market responds to so closely. People who don't know fibs, they just use the 200. So you'll often people will talk in trading that the 200 is the major measure of trend. Above you buy, below you sell. But actually the 233, you can see often when we're giving our live analysis, how price will pull back and will literally kiss the 233. It may miss the 200, but it'll hit the 233. So that is why we've built the Fibonacci numbers into our EMAs and everything like that. But why it matters in trading, it's almost like what's called a self-fulfilling power or a self-fulfilling prophecy. Like millions of traders watch fib levels. That's just the thing. Millions and millions of traders watch fib levels. And that's where kind of the psychology of Fibonacci numbers come in. Markets are basically driven by human decision making, fear, greed, panic, euphoria, overreaction. And believe it or not, those kind of natural human behaviors naturally create Fibonacci-shaped swings, which is crazy. All those things, FOMO and that missing out, re-clicking, all those things end up making Fibonacci shapes. And that's why human beings, this is what I've discovered in my research too, human beings unconsciously or subconsciously make trading decisions on patterns that are linked to Fibonacci ratios. And that's why, the ratios I gave, 236, 302, 618, subconsciously people enter trades, they see like a pullback, even if they don't know Fibonacci numbers, they are clicking on their mouses to buy or sell when price looks like it's pulled back to a certain point. So it's nothing mysterious about this. It's actually what they call behavioral math. And so when you have millions of traders all behaving similarly, price movements often align with those ratios. And that's why I said all the big financial institutions, they all code fib levels into their algos, into their algorithms. And so the big ones all do that. They do that. They base all their algos also on fib number EMAs. That's why we've chosen things like, the 13, the 21, the 233, the 987, the 2584. All these big companies with their programming, they're using fib numbers. And so that's why we are so huge on fib numbers. And that's why price really reacts incredibly sensitively to those numbers. How often are we doing live analysis and price either pulls back, it'll hit, the 2584, the 987 to the absolute millimeter. Now, it's not because we happen to be on the screen, but it's because massive amounts of money are built into the algorithms that are built into those Fibonacci EMAs. And that's why the ones we've chosen are pretty accurate, And so they're massive, for support and resistance, for trend continuation, for reversals, for where you take profits. So many people think that, Fibonacci numbers predict the market. Actually, they shape the market. So everything about trading is linked to Fibonacci. And so prices increasing, decreasing, all is about Fibonacci. Now, there are two main ways. I want to make this practical. So I don't know how long I'm going to take. Ty is also pretty good on this. So we have a slightly different approach. So the way Fibonacci numbers are mainly used, or the ratios are mainly used in what's called Fib retracements or Fib extensions. So let me share my screen. I've been rattling away. So let me get my screen on. There we go. Share. Oops, is that working? There we go. That looks right. Let me just move some names and faces. So when I click share screen, things move around and block my screen off. Leonardo Fibonacci, Leonardo da Vinci. No, they're not the same. They're not the same mark. And no, Leonardo da Vinci was not Dutch. Okay, and neither was Fibonacci. No, just teasing you there. All right, so there we go. So I've probably blasted with a lot of math. So here I'm just looking at I'm on the US 30 on the 3-minute. So let's look basically at Fib retracement first of all. So I use that less. Ty uses Fib retracement more than me. I use mainly more Fib extension, but I combine the two into one, and I'll show you how I do that. So basically, I do use Fib retracement, especially when I'm drawing up my charts. If there has been a pullback, I'll always use a retracement in terms, say, the daily. Well, let me show you that. Okay, well, I'll come back to that. I'll get ahead of myself. So basically, the way I use Fib retracement is let's say you popped on the screen and you turned on your indicator, and suddenly this is where price is at. So look, obviously, this has taken place already. So the way you draw a Fib retracement is always, if you're looking at a retracement from a bullish move, you always go from the swing low to the swing high. And so if I just did that now with my retracement tool, you go from the Fib low to the Fib high. Sorry, the swing low to the swing high. That is how you draw a retracement. Now, in my settings, I've rejigged them. So mostly a Fib retracement would only really have these numbers. So if I click them on again. So you've got all these numbers are in our PDF manual. So this is strictly what a retracement would be. You're only looking at the swing high to the swing low, or swing low to the swing high. So that is how a retracement would look like. Not everyone may have the 236. They may not have, the 786. Some of them leave that out. So, but I've got them all in. I've got all the key levels in. So what a retracement is used to look to see if price is going to retrace, in other words, pull back and then have a continuation. So that is the main reason why retracements are used. So here I've drawn a bullish retracement because let's just say we were sitting over here. We may be thinking, is price going to move up again? And if you want to get into a continuation, then you always draw a retracement because it's likely that price is going to pull back to one of these Fib levels, and then it's going to really retrace or pull back up again. So generally, the place to watch is generally the golden ratio. The 618 is kind of the industry standard for a pullback. So when it pulls back to this zone, then it reverses, it tends to then move up again. Sometimes it may only go to the 50. Sometimes to the 618, that's the most common, but even up to the 786, often this zone can be where price retraces and moves up again. And so this is the key zone. If price rejects this zone, it tends to move on. In this case, it didn't close above the latest high. But remember, we always use the indicator to find a safe place to enter. So generally, we can see here, look at price action here. There was a high here. We can see this nice trend line, some good touches there. Price has broken a trend line. It rejected the 618 area. And then let's look at the indicator. It may take a few seconds to load. Then we always look for a signal to see if we could re-enter that trade. Okay, great. There's a couple of signals here. I'm leaving off the MACD tonight just to keep it simple. But you can see there's buy momentum. And here is a buy signal from the buy momentum. Because we broke a trend line and we rejected a 618, you could have entered early. Look, we're not looking at all the rules tonight, but there would have been, okay, the magnet always messes up. There was 80 pips in that move. So that is how we use, that's like an example of using a bullish retracement to see if we can get back into a move. So let's look at the opposite. So let's turn this off. So looking at retracement. So again, for the bullish, we want to go from the swing low to the swing high, because we're looking to get back into move up, and there was 80 pips because it retraced and respected these key levels. This really, again, is the key level for the retracement. But let's look at another example this morning. So that one didn't. Let's see this morning's move, big move down. So this one's not as simple. So if we just crunch up the screen a bit, we can see this was the swing high, and here was the swing low. So this is where price bottomed out. So if we're looking to maybe get into a buy to see if price was going to, if it was going to retrace and move down, and we only turn on the charts here. So here we would go for the retracement. We'd go from the high all the way down to the low. And ideally, we'd want price to move all the way back to this area. So here's the 618. So between the 0.5 to the 786, this would be the retracement area. Is there going to be a continuation? And clearly not. So there was a huge move down from the swing high to the swing low. And we can see here, price didn't really pull back into this area. This is the zone. If it had pulled back there, likewise, if it was a quick pullback and price moved up, it may well have retraced down again. In this case, price just fizzled, and it's been moving sideways ever since. So that is a retracement. Admittedly, I don't use that a lot, but where I do use it is when I do my forecasting. So if we look at the 4 hour, let's have a look if there's an example. So you would have seen me do this in training. So let's have a look if we can do a retracement. For example, here would be, I'm trying to see a good example. So we could have done it. So if we're looking at price over here, so this is the 4 hour, we could have done retracement from that swing high down to that swing low. I do that when price hasn't reached the previous high. But you can see here exactly how powerful this is. If we're looking for price action, we can see here, look at this. From the swing low, price came up. It couldn't close above the 382. It came all the way. Where am I looking? That was after the retracement. So here you can see price action around the 236. It flew up through the 382, the 0.5. You can see here there's a lot of price action around the 618. And there we can see a lot of price action around the 786. So often I draw that for retracement. So if we, for example, we're on a 3-minute chart. I mean, this is not the best example. I'm going very quickly. But if you look on a 3-minute chart, we can see here. You can see even with the 4 hour, you can see, look at this respect around the 786. And if we go back to maybe some more price action, you can often see examples where price is clearly respecting those levels. So I also do it on a daily if it's, the markets have been so bullish. So let's look at a daily chart quickly. There's got to be a good pullback. This is probably not big enough, but you could do a fib retracement from that high there down to that low. But already it's invalid. They say once price gets above the 786, then the retracement is invalid. But if this hadn't happened yet, you can see, look at price action, definitely some action around the 618, rejected that, moved up again, and now rejecting the 786. So that is how I use retracements. But as I've said, I don't use them as often. Ty will probably talk more about them. What I use them for, let's go back to the 3-minute chart. I use them more for extensions. Let's reset the chart view and make sure I'm leaving enough time for Ty here. So I use them for extensions. So for extensions, you normally go from the swing high to the first pullback. So fib extensions are used to predict where price may move to in a current move. So, there is an extension tool here, a direct one. I don't use it because I like to combine, and I'll show you how I combine both with this example. So there's an extension. So you go from the swing high to the first pullback. Then let's just move that there to the first pullback. Then what that gives you is all the targets where price may move to in the current move. So again, the swing high, you go to the first pullback, there's a great move. So we've got all red candles, huge pullback, and then this will let us know where price is going to extend to. We can see the next target was the 236, which it hit. reversed, came back to the 236, reversed again, back to our zero, hit 236, it crossed through the 382, it crossed to the 0.5 and all the way to the 618, and then retraced. You can see to the 382, and the low was the 618. So you could have predicted at least some of those targets from that first pullback where we drew the fib extension. You can see how it clearly respects fib numbers on every level. That's what I love about trading. And even though we're not using it for the retracement, you can see again, look at the price action around the retracement. So that is officially how you're meant to use, the fib extension tool. But I don't use it. I told you I have tweaked mine so I can use it for both, and I'll tell you why. Okay, whoops, let me just correct that quickly. So let me hold it. Sorry, let me just get this on. And I'll just got to re-click in some values there. Let me just edit it quickly. So I click these off. So this is in the PDF, so you can see how I use it. So I've crooked the books a bit and come up with a system. You just need to use the retracement, and it gives you both levels. And I'll tell you why I like it, because you get 2 for the price of 1 here. So let's just delete it and rewrite it. Okay, so what we got here, we got the fib extension tool. This is the proper way to use it. From the swing higher, first pullback, you get your future targets moving down. So with my tool, you can see from that high to that first pullback, you can see they exactly overlap. You can see the extension tool plus my retracement. So the reason why I use that, so if I now delete, let me delete let's see if I can get the right one, otherwise I'll just put it in again. Now delete the wrong one. Let me just get I'll tell you why I like what I do. So let's go from that high to the first pullback. So I use the fib extension and the retracement as one tool. And you can see why I like it, because you can see now with the retracement, with using the retracement also as an extension, it also tells you the pullbacks, and it gives you good information about whether you should stay in the trade or not. Now, this obviously was a huge pullback this morning. That pullback was, look, 158 pips. That is massive. So not sure if I would have stayed in that one. But you can see with using the fib retracement as an extension, you get the pullbacks and you can get the extensions in one go. That's why I like it. So here, obviously from the first low, we pulled back to the 618. We came down to the 236, rejected the 382, came down to the minus 236, which actually should be positive, but doesn't really matter. You can see we're pulling back to all the fib numbers. Almost every move is predicted by one of our fib ratio numbers, every single one. And even though I'm not using it for the retracement side officially, you can see again how price goes on to respect a lot of those levels all the way. Price is currently sitting there. So that's how I use my extension. And that's how I use it also for, let's just see if there's another example. That's a bearish example. So we're on a bullish move with a pullback. That one went straight up. I'm just quickly looking back to a bullish move with a nice pullback. Everything's looking bearish here. I'll just scroll back quickly. Okay, this looks like here's a very good one. So this is how I use my fib retracement, but as an extension. So this is a bullish one. We go to the low to the first pullback, and you can see how I get 2 for the price of 1. So there where price made the high and it pulled back. Look how it pulled back to the 618. So this is the golden ratio. When price pulls back between the 618, the 0.5, and it rejects that level, there's a clear sign it's going to move up. So if I was in this trade at pullback, I did a fib, if I had the nerve, held it, that's going to tell me it's rejected the area, it's going to extend. Then you can see how it just gives you continual targets. Price stops exactly. It stops on fib numbers, pulls back to fib numbers, all these ratios, and you can see how this move played out. Almost every pullback or rejection of every pullback is exactly on a fib number. It's crazy. That's how it works. You can see, so from that move there, this move was massive. That was 640 pips. What was I doing at 3 o'clock in the morning? So that is how you use, that's like a bullish extension. But again, I like 2 for the price of 1. So that's the only tool I use. And again, our settings are in the Fibs, in our PDF. So if I just use the daily, you can see I've been using this, this is the daily, and I've been using this, the same Fib now since, what's this date? Since April the 25th. So this is how I do my daily Fib from the low to the first pullback. And you can see exactly how this is predicting price action on the daily chart. Again, almost every pullback, every re-entry, everything is about Fib numbers, on the daily. And so that's why if I like to make my daily nice and thick, because it doesn't really come up much. But then let's just go to a 5-minute chart, and you can see again how these are daily Fib levels. So of course, when your chart is blown up, I mean, obviously there's been a lot of range, but let's just see how price has respected any of these numbers. It's been in between, you can see between the 0.5 and the 618. So it's been amazing. Here you can see, here's a good example. Look how it's respecting. This is a 5-minute chart, but look at that. That's a 0.5 on a daily. And you can see, look at that price. Can only explain those highs there. And if you just it's amazing looking back with price action, how even these daily Fib numbers, they hardly ever appear on the chart, but when they do, they're normally massive for price action. You can see here a lot of action around there. Look at this, around a 236, a lot of action, and that's on a daily level. So again, that's how I use my Fibs. And again, a bit of a twist with mine. I crook the books to get 2 for the price of 1. So Ty, would you draw that a 1-minute chart? Oh, absolutely. I forgot about that. So a 1-minute chart, let's just reset the chart view, and let's just get rid of the daily wherever it's hiding. We'll just delete that quickly. How I mostly use it on a 1-minute chart is for retracements and for re-entry. So let's just say in this move here, we're now on a 1-minute chart. This will tell us whether to stay in a trade or leave a trade. So we take the low to that high, and let's just get it back to 1 point. So often if I'm trading and I've entered a trade at the first pullback, the first decent pullback, I'll draw a Fib. And then that tells me if it's pulling back, where to put my stop loss. So for example, we can see here from this afternoon, and obviously I've got my chart blown up quite a bit. But from the swing low to the first pullback, look at price action. A pullback to the 382 rejected that, and up it went. Look at that, to the millimeter, the 786. Pulled back 382, and again, price action can be almost totally explained just by Fibonacci numbers and by these ratios. So I'll end it there. Ty, hand back to you for your half. I'll stop screen share and then hand back to you.
Cool. Very, very cool. Let me figure out adding myself to this party for a second. There we go. Okay. Man, you are calculated, Mr. Mathman. Right on like 30 minutes into this thing. Very good. I know there weren't too many questions there, but yeah, as you get into Fibs, guys, you're going to figure out what suits you best, and you're going to, really that more than anything, figuring out the theory behind it is then going to empower you to tweak it for your own. So I'm going to just remove Dad from there, and I'm going to share my screen, and we're going to dive into TradingView and take a look at this thing. So let me do this. And which one is it? This one. Let's see if this works. There we go. So I have loaded up some default TradingView settings here, because I know when most of you load TradingView for the first time, you'll actually have like a random volume indicator down here, and your chart will probably look like this. You're going to have grid lines and all sorts. So you want to right click on the chart, go to settings, and I've just gone and basically apply defaults, which is, yeah, just it makes it look like that. But inside settings, I have got a whole video on a lot of these things, but I want you just to really reiterate. It's got a canvas. Make this thing solid black. It's a little bit nicer on the eyes. Do what you like, but I'm going to do what I like. Grid lines, I get rid of them. How much cleaner is that? So a few little things like that. The symbols, you're going to notice these are the standard colors for the bodies, the borders, and the wicks. So I don't mind keeping that standard at all for this right now. I have got a template already made up with, Dad's color. Well, I can show you, and then you've got them on here. So Dad's colors look like that. So there's the green and the red, which you're going to see a lot, obviously, in his chart. So this is where you go and change these. So if you want to, guys, you could screenshot this if you really wanted to, and you could actually then go and, you know how you can create your own color? You could basically mimic those exact colors if you wanted to. But for now, I'm going to go to defaults, which means I've got to annoyingly go back and just rip that canvas back to black, get rid of those, get rid of, where was I? Those. There we go. And there's a few other things I love to change, but I'm not going to get into that right now. I just wanted to make this as default as possible for you guys. So tonight, Fibs, I said already in the system PDF page 61 and 62, that's where you are going to see our settings in case you didn't get a chance to see them. So Dad's already shown you plenty. And inside of the Fib retracement tool up here, you've got all these different settings. And I also used to use the extension tool. I've also implemented mine into the normal retracement tool up here, put a star on it. And because of that, it shows up in my handy dandy little favorites bar right there. And I went through all of these in the top 10 trading view tools that we use every day. And that's a video in our playlist that I encourage you to watch and maybe rewatch. Go check the timestamps. There's loads of little hacks in there. So I've got it up here. So as soon as I click it, it's for me, because I got the magnet tool on, let me turn that off for a second. It's going to look like that. And so you're going to see these lines. You think, what the heck's going on? Different to Dad's. There's the settings right there. And so usually, I never used to have, where are we? Oh my goodness, now it looks all different to me because I don't usually untick anything. I would never have originally had those extensions. So that would have been what I had, low to high, and the other way around if you're going from high point to low point. But I have got those on, so I'm just going to leave them on, 1.618 and 236. Those are my extensions that I have. So I also use this as an extension tool. And so I've got them baked in there, and I don't see them when I don't want to because they're normally quite far away. So I've loaded up a gold chart here, and I might even, depending on time, load up Bitcoin as well. And I'm going to show you what I do when I'm approaching a chart for the first time. I want to see the history of this thing. I want to see how it moves. I want to see how deep the retracements were, what happened. I mean, this is the history of gold going back to 1970 down here, guys. So hopefully whatever chart you're trading, you've done this before and you've gone back in time and had a look at the movements and the cycles and think, sheesh, I wish I bought some gold, or sheesh, I wish I bought some Bitcoin. But whatever, right? We're here, and the beauty of this is we're going to look at these cycles. So right now, checking this out, look, this data's a little bit light. So if anything, you're going to look for normally where the move started, where the impulse was. Because if I go down here and even just go to this high point right there, we're already going to see, look at what happened there. So price inside of that cycle, I mean, you got to realize that we're looking at this on a weekly. So that time zone between that date down there and that retracement is 2,400 odd days. So down the bottom there, you can see on the chart, it says Monday, 5th of Jan, 1970 to 76. So there is a 6 years worth of gold right there. What happened? Price ran up and pulled back into that zone. So that yellow line for me is the golden ratio, the 618. Let me just check that isn't anyone telling me my sound's off. No, I think we're good. Okay. Someone's having trouble getting into our Zoom. No, I'm not sure why, because everyone else managed to get in here. Sorry. I don't know. I'm just going to keep going, guys. I'm sure they'll figure it out eventually. But you can see there. So 618, these are those retracement levels, very similar to what Dad had. So from that low point to that high point up there, I've just dragged it across so we can kind of see how price is going. But usually, you'd go to there. I'm just dragging it further so we can see how price responded to those lines after the fact. And so when price pulls back 12.4%, you can see the percent. I've got them as percentages here. You can adjust these to have labels of percentages or just numbers or all sorts, guys. You can go into those settings. You can save a template for your own settings, for someone else's settings. You can apply the defaults. I am not going to do that right now. Actually, I probably can. I don't know if I've saved mine. Let's just do it. This is what yours are going to look like when you load them out the box. There's your fibs. So don't freak out if your fibs look like that when you draw a fib for the first time. Fully colored in backgrounds, all sorts of weirdness. I'm going to now just really pray that this is going to, go back to what my settings were. Maybe if I can just do Control Z. Yes, it did. Backwards. There we go. There's my settings. So there we go. So pulling back, price pulled back at this point, like Dad was talking about, 12.4%, 236. And the way I learned these, again, more from, I zoom out and use these on high time frames. You can use them on the 1 minute chart, of course, but I place way less value on them on a 1 minute chart. This is way more for me looking at where price is at, zoomed out in terms of price retracing and looking for better buying opportunities for investing long term. So in this sense, it works the same on, I like to draw these on a 15-minute chart for a trading standpoint because you're getting a bit more data. 1 minute chart, I'm not entering because price suddenly got into the 50 to 61.8. I'm sure Dad already said this in case I missed it and tweaking some settings. We use TrendForce to enter trades. That is our confirmation. Those are our rules. But more often than not, when price pulls back, where is an arrow? Let me see if I can just pull up an arrow. Here we go. So when price goes from that high and pulls back to a level, 236 over there, 382, 50%, 61.8, or all the way down to 786. Dad had that level. I've also got the 886 and a line in between them, the 835, because this is also a zone where if you're in a strong, if you're buying gold, for instance, I mean, you can see what gold has done. I mean, the price of gold down here was $197 an ounce. And what is it right now? 4,180. So, you know, you're not going to go wrong buying gold. It's probably going to keep going up long term, but you have a long-term horizon for that. But what I'm trying to tell you is in measuring the overall strength of a trend and what happens and what you can expect in a normal trend, price pulls back 50%. And in that golden ratio, 50% to 61.8. So that would be normal. In a strong trend, you would see a bounce reaction normally at the 382. So if you've seen price pull back to the 382 and then it continues up violently and breaks the zero line where you drew that fib from, that's a strong trend. If price pulls all the way back to the 786, 886 zone, that's a weak trend. And prices pulled back quite a lot and has then taken off. And so, you know, say you're buying gold, you would have hopefully maybe dollar cost average, which means you're buying a little, like if you're keen on buying gold, you buy it maybe some gold or some Bitcoin once a week or once a month or whatever, and you're just putting in a little bit every time and you're getting the average. So if you bought some here and some there and some, which, well, that never happened, but because that never happened, you got some there and you got some there and you're pretty happy today. So that's what dollar cost averaging is. But, you know, you would have been saving some for down here, but hopefully not all, because if you were waiting for price to come back down here to go all in, that all in opportunity never happened and price ran. So we get the average. So a 236, I usually wouldn't count a fib as being active, like until price pulls back and closes more than 236. I wouldn't say the fib is active in the sense that I wouldn't expect price to then drop any lower until prices actually close below that 236. Then you can probably likely, on the odds of probability, expect the 382. And then again, you might drop a zone. So if I drew this fib and price was still here and none of this had happened, I draw my rectangle. I'd take a rectangle tool and I get in that 50 to 61.8 zone and I draw a little box like this and we wait. And I like to line up the left with the high so I know where I drew it from. And I make those colors usually the green and the full color a little bit more buying savvy. So I would have a zone like that. And then if I was waiting and I was really hopeful, well, the next best opportunity would be down there. And then that's my fib, guys. That's what's happening. And then if all things were going wrong and price came down, those are the extensions down, but that doesn't really apply right here. So I'm going to delete that, and then we're going to go the other way. I'll show you one quick extension before we draw another one. So the way I like to use the extension tool with my fibs is I will draw a fib in reverse from the high to the low. Oh, no, give me those settings now. Okay, I'll correct that. So then I'm going from high to low, and it's giving me those extensions. I'm going to draw it out, and you're going to see it still work, and I'm just going to go and adjust it. You can see there, price came up and hit it. Let me just see if this is going to work for me. Give me back my settings. Let's go for these. Yes, there we go. Have I got my extensions? No. Wonderful. Let's go back there and check if it's under. Let's just do this and this. Hopefully, 136. Oh, it's a different color. Anyway, this is an old one. Let me just go back and see if it's under this one. No, not that one either. Okay, that's fine. It's giving me those. I'll work with that. 2, 3, 7. These are some old settings, but they're very, very close. So let me just get onto. We're playing with these now. Okay, there's that extension level. There's the next one. And you can see when price basically has gone down into the pocket, the 50 to 61.8 zone that we drew because of this pullback, this big retracement, once price breaks that zero line, which was an all-time high, the next levels that we can expect price to often extend to, I say often because nothing's guaranteed, would be the 1.618 up there. So that is 161%, so to speak, of that previous move that we were measuring breaking out. So you can see price came up, got close, came back, and then what? Retested the previous all-time high, very common, and then came up, smashed it, rejected it. Look, none of these weekly candles are closing above that fib level, and this is back in 1979. So, fibs are still very much a thing. I'm on high Kanashi candles. Let me just turn those off for now. Dad, don't get upset, but let's just get to mine. Probably just throw my chart for a loop. There we go. We were way down. See, look, gold's up there. We were just playing down here. So I know time's going to disappear when I start having fun with this. So that's how I draw an extension. And you see price obviously just went on an absolute run after that. So it extended far more. But then what? Well, we've got another cycle here to measure. We've got lots of low points. We've got lots of high points. Let's check out what happened. So there's our low. I've had to zoom out a little bit. So if I go to that low down there now, and we're going up to this high, I'm just going to drag it across so we can see how price reacted. Okay, so price came down, hit the 50, came down to the 60, got a little bit weaker, and then I've only got 786. I don't even have 886 in here. Oh man, these fibs are killing me. Anyway, I've got to go and restore my settings. Let me just double check if I've got them in here. Where's no, I'm gonna have to go and redo them all. Wonderful. Anyway, they still have the major lines that we need. So price came a little bit lower than that. Remember, this is age. There we go. That's what I want. So let's go further across. Not finished with this move yet. There we go. There's that 786. So price did come all the way down. Look at the amount of respect for the golden ratio right there. I mean, guys, this is a long time. That's 1,100 days. Few years it hung around there in the 1993 to 96. Came down lower. Imagine being able to buy some gold at $253 an ounce. Anyway. And then what happened? Check this out. Look at this price action here. Price broke the previous all-time high, broke the zero line, came back to that 236 level, which was also, you can see, was a previous bunch of resistance. So resistance flips into support. Off we go. Breaks it again. One more retest, and then off it goes. So you can go back and check these cycles out over and over and over again and just see how this works. So I see a high point, I see a low point. So let's just see what happened here. If we go like this, go from high to low, drag it across so I can just see what's going on. There's a nice big pause there for a while at the 1.618. There's a few weeks. Yeah, there's quite a bit of time there. And then again, get a big red candle. So, I mean, this isn't showing as, you know, I've seen far more accurate bounces and whatnot. But where are we right today? So let's just get rid of this one because we're on gold. And you can see that obviously since, you know, 2020, there you go, October 22, when gold was $1,600-ish. I'm pretty stoked to say that we bought some gold down there. But right now, what can we expect? So let's see, we've got, I would look at that high there because that was an all-time high for quite a while. And then let's draw a fib on that to see. Well, firstly, let's go from this low to see what happened there. Where did price come back to? See, 382. So we've got a strong trend. Like prices run up quite a large percentage in that zone. So from that low point there, prices run up as an asset percentage-wise. It's gone up 98%, 100%. It's gone on quite a run. So you know, basically doubled in value in the space of a few years, from 2016 is that low to 2020. 4 years, guys. So in 4 years, the price of gold doubled. So what happens then? Price pulls back. Strong trend. It's had a strong run. Pulls back to 382 and off it goes. So now, where are we? Let's try and see if we can get an extension that's a little bit more accurate on this thing. Draw this out from that high down to that low. Going from there down to there. I'm just going to drag it across so we can see when those levels were hit. And usually I have the magnet tool and I get this bang on, and then I come in and draw some horizontal rays on there. But you can see here, we definitely got a reaction at the 1.618. Whole lot going on in there. Price ran up, closed above, meandered around, broke above, retest, gone. Look at that. The next level ran up. First piece of resistance was that 236. I think it's saying 237. I don't know why it's done that. That's a very weird number. But 236 is what I usually have. Pretty dang sure. I need to check. Oh, goodness, dragging the wrong thing there. Anyway, so there's an extension that was hit. And now what? Well, you know, there are more extensions that you can draw. But let's just get to this zone right here where we had gold do. I mean, look at that. You can see just that compression, right? Who's seeing that flag compression pattern right there? I don't have the magnet tool on, so I should be able to just, you should be seeing that. I mean, that's not very wonderful and accurate, but hopefully you are seeing how all of those candles are just, you know, there was some resistance right there. You can see how these are weekly candles, remember? Price just came in, compressed. This is April this year. So when we ran up, we just compressed, bam. I don't have a MACD on, but it'd be quite interesting to see what that was doing. So that's a very classic pattern. And what happens too with a flag pattern, often the pole you can measure from the base of that move, which, you know, there was a bit of mucking around. I'm not doing this highly accurately, but as a pole, take something like that, take it to the breakout, and then where are we right now? Oh, look at that. Isn't that crazy? how the run into that flag of resistance, I don't know if you caught that. Let's just move it back and let's just duplicate it. So we still got it in place. Where's my duplicate button? There we go. Clone. Sorry, that's what I was looking for. Clone that up, stick it on the break. And I mean, look at that, guys. I mean, what is that level? I drew that kind of roughly 4,300. So once you break a pattern like that, it took a while to get there, but well, not that long. Once we broke out of that, we hit that level in 49 days. 26% as an asset moving is pretty huge. I can't see the chat, so if there's anything, just shout at me. But back to Fibs, because that's what we came here for. But when you see those kinds of patterns, I'm going to utilize that right now because I'm going to drop this down to a daily because we're going to get a little bit more action on you. So you would definitely be cleaning those lines up a bit if you were, monitoring this on the daily, something like that. Now, what do we have? We've got a high point and we've got a low point over here. So what happens if we draw the fib from there to there? Get a little bit of an extension going on because once we broke out, we broke that high, came back for almost a bit of a retest. I'm not using the magnet tool. Sure enough, price runs up, hits the 1618. Well, this is, 1618. And then the next one there as well. Like you just see this kind of price expansion over and over and over again. There's other extension levels that we could actually add to this, guys, but I'm just trying to show you how I use this in the context of even now our daily, our daily, where am I? I did it a couple weeks ago. Checklist. There we go. So I have, you guys won't see it right now, but it's in the PDF. Went through it recently a couple weeks ago, how we always check the news. We're then looking at those high time frames, the daily, the 4 hour, the 1 hour. And then when it comes to fibs, I usually will draw that and look at my session lines on either the 1 hour or the 15 minutes. So that's when I'm usually going and drawing these fibs. So this is a daily. So a lot of these fibs would be in place for me for a long time. Like we've seen this move right here. See, this has just been a very, very strong move, guys. Like when you think about when the bottom of this was, you got to go back quite a few years. I mean, where are we? There's COVID. That's the dip of COVID. You can just see it on any chart once you start seeing that aggressive spike. See, price was trending up nicely, and then bam, huge spike. So let's even see if there was a fib that we can see how that spiked down. So low point before that was down here. So the lowest low that we had was there. And I mean, you can just see over and over again, even that, guys, there's that high. What happened? Price pulled back to that red zone right there, 786. But then say this is still our low point that we want to draw it to. And we want to, where's that dip? It was in there. That's COVID right there. So what if we went up to that point there? Where did price? I mean, check that out, guys. So that there was the height. So right before the COVID dip, the massive spike you'll see on every chart, the manipulation. There is the 9th of March in 2020. And then we had prices on every chart drop like crazy before they ran. So in the space of just 7 days, price dropped 15% on gold, and it bounced off the 236 perfectly, which as you can see as well, was a pretty beauty stop hunt down here. Everyone who was buying this trending market on leverage would have had their stop sitting beneath these lows, and that just came back to smash that and then run. So, I just wanted to show you that even in the midst of a strong trend, huge manipulation spike down to that 236 and then off it went. And then what could you have done? Like just looking at COVID, because we're entering some interesting times right now. Let's just draw from that high like I would draw a retracement that way down to that low, and let's see what it looks like. I'm not using the magnet, but check at that. I mean, down to there, price breaks, comes down, meanders around that high for a bit. I mean, this is a very strange time, 2020. But then what? Price ran, smashes through the 1618, comes up to that 236 level. You can see prices reacting. This is a daily chart. But then where does it come back to after that? Boom, 1.618, continues, and then it drops down again to that level and pauses, comes down lower before the real big run continues. I mean, this is highly stretched out. So you're seeing that there's a lot going on there. So if we went from that low of COVID, since there was a lot of action and a lot of trades placed, and to this high right here, we're going to see, again, price pulled back to the 61.8, up to that all-time high, came down a little bit lower, and then again, once it broke that level, it was gone burgers. So then, same deal. I'm just doing the same thing over and over again. Delete that. Go from that previous all-time high that we had. Sorry, wrong tool. High point down to the low point. Draw that out because we broke it there. Then what? Again, smack, smack. I think I drew that one a little bit earlier. So that is how I use Fibs, guys. You can zoom in and zoom out as much as you want. I don't, like I said, tend to do it on a 1 minute chart. After a while, you'll just begin to see it on a 1 minute chart. I mean, yeah, you'll just see when prices pull back 50% because your eyes just get used to seeing price run up a certain amount and then pull back a certain amount. So interesting, guys. Do you see a similar kind of pattern playing out here? What happened here? Compression, compression, compression. What's going on here? Another potential huge flag. I'm not saying that gold's going to suddenly break out, but it is in an interesting zone of doing some things. And if we've got these lows like this, really would like those to hold, obviously. I like to often come back and see how many touch points I can get on my trend lines. Like, was there like a point of resistance like this? See, price came up and stopped and messed around, broke above, rejected, bounced up, came down. So that line is, it's got some history attached to it, which you could have even drawn through here. And then anyway, there we go. So price is sitting in there, whether or not you're looking for these kinds of things, or, at some point that would have been a pattern you were looking at. Right now, what I'm seeing with this, just because we're looking at it, is a W with a higher low. So real basic, simple price action, right? Price runs up, creates a high, gives us a low. And on the daily, even here, we're getting still a lower high, and then we get a higher low. So there's a W even right here, and price came up and then came down again, gave us a bit more of a retracement. And what do we like to see? This is branching into other stuff that we don't touch on often, but we sometimes we spoke about it, I think, in our last live analysis session. But when you've got these harmonic patterns, these W's, just to show you, this is what I'm seeing. You can see it in there. You've got the W pattern if you go like this and like this and like this. But usually what I'm seeing right here, which, don't hold me to because there's a lot to happen on these higher time frames, I'm seeing a W like this. So there's a low point, a higher low, and if we can get above, well, we have once, usually when this C pattern, because believe it or not, these harmonic patterns are all very much Fibonacci based as well when you draw them accurately. If we were to draw some Fib retracements on these levels, it would be called either a butterfly or a Gartley or some kind of a different harmonic pattern, but those harmonic patterns are completely fueled by Fibs. So this is a whole other extension on the extensions of Fibs, but it's something that you can go and learn about if you want to. Eventually, you just start seeing these, double tops, double bottoms. We call them M's or W's, but they're actually got a little bit more grounding in this, which is Fibs. So when C in this context here, so you can see that you've got X, A, B, C, and D. We don't know where D is just yet, do we? It's currently over here, but usually if C is higher than A, then we'll say that D will be higher than X. So X being our origin point over there. So because we had a X, A, B, C, we can expect an all-time high because X was our all-time high. It would not be out of sorts for this to, for price to get up there. So no, I'm not saying that I have a crystal ball and that gold is going to be worth 4,500 any particular time soon. Will it one day? Very most likely will be. But that is just a little bit of a extra extension on all things Fibs. And I need to double check and see if we have any questions. So let me figure out how to unshare my screen because all my things are all over the show. And if I can see, there we go. Questions. So Selena, 1 minute chart. You already answered that one. Someone on an iPhone. Can you put the video links in the PDF and make them clickable? Possibly. Video links in the PDF. Probably not, because here's the deal. So that PDF, what we have is a playlist, guys. So we have a playlist that I also update, and that one link to that one playlist is I can edit that. If I put links to videos inside the PDF, then for instance, I did this video on Fibs back in May, and this is now going to be the new one. Therefore, that PDF that has gone out to everyone is going to have an outdated link. So the easiest way I figured to do this is we have a PDF that's got all the content that matches TrendForce specifically. Like this Fibonacci stuff is in the bonus material. And then any videos that we have that we, as soon as someone joins, if through the website, they get sent a couple emails, and there's a system PDF. It's also the basics course if they haven't gone through that as well. The 90-minute course split into 4 videos and the PDF for that as well. Then they also get a picture of the roadmap, which shows the stages that you're working through, the basics, learning the ins and outs of TradingView, learning the ins and outs of TrendForce, then moving on to sessions like this, which are more advanced. And then inside of that, they're also given a link to a special playlist that has all those videos in that order. And if Dad and I ever record a fresher version of one of those videos, all I need to do is drag it into that playlist and drag the old one out. So the only link that you need is the link to that video playlist. And they're all titled fairly well, so you should know which is which. But I mean the training videos. Can you put the video links in the PDF and make them clickable? I mean the training videos. Okay. I might have misunderstood your question, but hopefully I answered it roughly in there. But yeah, any other questions, guys, fire away. We're here. So, it's almost 9 o'clock, but if you have any more, whether it's Fibonacci related or anything TrendForce related, it's Tuesday night. We're here for you guys. Live Q&A. If you can ask us anything. Selena says that was awesome. Thank you. Really appreciate it, Selena. Love it. All the way from beautiful Tairua in the Coromandel. I know I'm still getting used to this, guys. Looking left at the camera, looking at my screen there, testing it out. Let me know if you like it. If you don't, I'll figure out a way to adjust things. But I am loving not having a camera above my monitor. It means I can raise my monitor finally a little bit higher. And that was awesome. Kylie, thank you. Appreciate that. But yeah, guys, I want to encourage you, if you can think of questions or comments as well while we're at it. But I really want to encourage you, whatever chart you're on. And Dad, if you want to share any of that feedback from your testing recently we're not going to, suddenly throw everyone off to go and get on the Dow. But yeah, I've done a couple years now on gold. When I started, I was only on the NAS for a full year plus. Then I did a full year on the Dow only, always looking at a Bitcoin chart along the way. But not usually ever day trading it on leverage. And then last couple of years, like I said, gold. We always would have historically encouraged people to trade or look at the NAS first when they're brand new, because it has historically been quite a polite chart. In recent times, I would say, I haven't been looking at it as much, but I know Dad's been doing a lot of testing, and he's found that actually in the light of TrendForce, that the Dow can be pretty flippin' awesome for new people too. So gold, not so much. Gold is not a new person chart. So I know I was just drawing on it, but I want to encourage you, whatever chart that you're on, whatever chart that you want to trade, whether it's the DAX or whether it's Bitcoin or whether it's whatever it is, fill in the blank. Go and do what I just did with drawing those fibs. Go back in time and look at the price movements and the waves and how far it came back, and just get familiar with the chart that you're on. Zoom into more time frames. It's whatever, like if you're treating this seriously, like I love it. There was I think Joseph put a cool little clip in our group chat yesterday about, doctors go to medical school for a long time, 8, 9, 10 years. You want to make this thing a serious profession, treat it like one. If you want it to pay you like a hobby, treat it like a hobby. If you want it to pay you like a business, treat it like a business. So if you're on a chart, you need to know that chart inside and out. Like go back and spend time, remove your drawings, redraw them, get used to seeing trend lines, get used to drawing fibs, all those things, and just learn how the asset has moved and behaved, and look at correlations between things like the DXY, which is the US dollar versus everything. And if you see something violent on a chart, go and look at the DXY and see what was happening then. Maybe go look at the VIX, the volatility index. That shows the greatest spikes of uncertainty and fear in the market. You'll see some very interesting inverse relationships there, but I'll waffle otherwise. Thai Movember is over, just FYI. This has gone far beyond Movember, but I guess this camera and this lighting are showing it up even more. It's growing on me, and it's a little stuck on me at the moment, but yeah, I will look 12 if I shave this off now. I looked young before, but now that I've had this, you'll laugh. I'll look even younger. What is the DXY? Yeah, I may have answered already. So the DXY, Kylie, is the dollar, or some people call it Dixie, but DXY, it's the US dollar versus everything. So it's a chart which shows the strength of the dollar versus everything. So you can't trade it. It's just showing you basically an index, not an index, but it's the relationship the US dollar has in relation to everything else, because it is pretty much the global currency, so to speak. What is it? Yeah, you know what I mean. I'm a little under-caffeinated at this point, but it is the global reserve currency. Is that the right term to use right now? Yeah. Just teasing. Love it. It's all good. Melvin, thanks for the heads up around the Dow. Only used to look at NAS as a newbie. That's okay. Would you advise to move over to the Dow? I don't know, Dad, if you got any closing thoughts around that research. I'm throwing you on the spot. You may have not been ready to reveal that, but some very interesting thoughts and facts. He's never sleeping, guys. And that's on. He's always researching. He's always checking. What could we do better? What could we fine tune? Let me pin you so we can see you too, because I know you've got some gold to close us out for the night. There you go.
Yeah, no, we've always historically said I started on the NAS and then I kind of shifted to the Dow, and we've always seen the NAS as being more tame, more predictable, easier to manage than the Dow being, they call it the dirty 30. But recently there seems to be a shift. I've been noticing, and I've done some research too, that the Dow actually may be better to trade right now than the Nas. I mean, there are more pips in the Dow, the moves are slightly bigger. But especially doing research with our indicator is very good on the Dow, especially in terms of our trend zones. Our main trading trend zone, 3 times higher, 8 times higher. When price pulls back into those zones on the Dow, it's highly predictable that price is going to, move up if you're bullish or down if you're bearish. So it seems I've noticed the Nas also has been going sideways quite a bit more than the Dow, and they've been more spiky. So, I mean, I've been doing a lot of research, and basically with TrendForce, Dow comes up on the top, gold comes down on the bottom. I mean, we can talk about it more one night. The other one is the DAX, which is the GER30 on, I think on our, if you're with Black Bull, that's also very popular and also ranks very highly. So, the US 30, the Dow and the DAX are very, very good for indicator. Gold rates is the most difficult. And that is because, the pullbacks, the spikes, and price doesn't always follow closely with with things like stop losses and things. There's often a difference. I've noticed that. But whereas the Dow is very good on what you see is what you get with the Dow at the moment. So I'm only doing trading the Dow at the moment. I've dropped the Nas. I'm just specializing. I've been doing both the Dow and the Nas, for years now. Often trading both, but I decided the Dow is definitely, with my research, number one. And that's the only thing I'm trading now is the Dow.
Cool. There you go, guys. Well, yeah, we don't have to talk about the DAX, but I know a bunch of our team do trade it. And it's, call it the German version of the US 30. It's, it's the German stock exchange over there that has a bunch of those companies in it. It's an index. And in speaking to a lot of people, I knew guys that were trading for 20 years who, when they joined us a while back, they started looking at the Nas for the first time and thought, oh my goodness, where's this been all my life? All I've traded is Forex pairs. But indices, by default, over time go up because they're a basket of companies. So the US 30, the Dow Jones, is some 30 particular companies in the American Stock Exchange. The Nas, or the Nas 100, also known as the US 100, is a basket of the top 100 companies, but also tech related. So there is a differentiation between the NASDAQ as such, if we're getting real nerdy, and the US 100. I think some of them might include a few other companies, but the one that we mainly look at is the one that's got basically tech companies, which have a bit more of a global interest. And over time, those companies, the reason why people invest in those as stocks is because you're investing in 100 companies in one ticket. So instead of just picking 5 horses that you like, you're picking a basket that has 100 in it, knowing that some of these horses are going to perform. I know that's a terrible analogy because it's not gambling, but we're also, we are speculating. So there you go. But those indices, those companies, they are normally growing in value over time. Therefore, they are more likely to go up. Whereas, Forex pairs and currencies, they are going to, as different economies change and things, those are going to go up and down and maybe stay inside of similar zones. But you have, by default, indices are going to be going up in value. So anyway, the night has gotten long. Really appreciate it, Melvin said. Would be keen to have a session around pairs. If it's Forex pairs, man, I am not familiar with those. I can mess around and draw. I mean, every chart is still a chart. But Jeremy, really appreciate that. He says, was great, was transfixed and will rewatch from my notes. Love it. Very, very cool. Great to hear that we're striking oil, guys. So let me just unpin Dad as we sign off. But yeah, anything else? Sorry, I mean indices. Okay, cool. Yeah. Robin, awesome training. Thank you so much, Ty and Tim. Very cool. Well, guys, we have gone a little bit on beyond 9, so that is us for this evening. Hope you have an amazing rest of your Tuesday night and your week, and we will be back on Thursday morning for live analysis. And we're getting close to Christmas, but we are definitely here next week, Tuesday. Next week is still all systems go. The following Tuesday, though, I think being Christmas Eve, potentially, probably won't be. So we will inform you guys on that in the chat. We'll definitely make it very clear on next week Tuesday night session, but we're only taking a couple weeks off, something of that nature, and then we'll rip right back into it. So without further ado, we'll let you get on to your evening. Thanks for joining us tonight, guys. Trade safe. We'll see you soon. Good night.